हेलो एंड अ वार्म वेलकम टू अनदर एपिसोड ऑफ देसी फायर पॉडकास्ट। मैं हूं आपका होस्ट रवि हांडा। इस चैनल पे हम लोग बात करते हैं फाइनेंशियल इंडिपेंडेंस के बारे में, अर्ली रिटायरमेंट के बारे में, और इन सब चीजों को समझने के लिए दुनिया में क्या चल रहा है, व्हाट्स हैपनिंग ऑन द इकोनॉमिक फ्रंट इन द वर्ल्ड, व्हाट द आउटलुक इज फॉर नॉट जस्ट द नेक्स्ट 3 months बट फॉर द नेक्स्ट डेकेड। इन सारी चीजों को डिस्कस करने के लिए आज हमारे साथ हैं डॉक्टर विधु शेखर। एंड मैं तो इसको तब से जानता हूँ व्हेन ही वाज जस्ट विधु। वी वर टुगेदर इन कॉलेज इन IIT खड़गपुर। उसके बाद में ही वेंट ऑन टू डू हिज मास्टर्स फ्रॉम IIM Calcutta, and then further ahead he did a PhD from IIM Calcutta as well. Post that, he is currently a professor, a financial economist, I believe that's the appropriate term to be used, at S P Jain, Mumbai. और बाकी के बारे में would be better if Vidhu tells it in his own terms. So Vidhu, welcome to the show, and just tell us a little bit about what do you do and what your background is.
Thanks, Ravi. Pleasure to be here. Thanks a lot for inviting me. You have told quite a lot about me already, but I think one of the star things that even you might not be aware, or maybe you're aware, is that I was with Mr. Dhoni at my school, just 1 year
Ah,
junior to him. So I didn't play cricket with him, but I played badminton with him a couple of times. He, of course,
fair.
kept on playing, I kept on studying, so you can see the difference of the outcome that is there. Anyways, yeah.
So,
Uh,
Abhi, you're following the IPL this time around or not so much?
no. I'm not that much of a sports enthusiast, unfortunately. Used to be in old days, but not now.
Not
Now it's
fair.
more all Professor Giri and handling students. उसी में सारा समय निकल जाता है.
Uh,
So that's
मतलब, what exactly is it that you teach at SP Jain? अगर मान ले, मतलब,
yeah.
so there must be multiple courses, but एक कोई broad domain होगा ना, which is your
Hmm.
specialization.
Yeah.
So
So
what?
in terms of teaching, I specialize in fintech and corporate finance. In terms of research, I specialize in financial economics and fintech. So yeah, those are broadly my areas. I have also had 6 years of work experience prior to my PhD, post my MBA from IIM Calcutta, where I worked at started my career with Edelweiss as an investment banker, and then went on to do with a couple of US dollar million hedge funds, so big hedge funds doing their private equity and public market investments. So I was there for in the investment side for I think 4 years around, and then the academic bug bit me, and I ended up doing my PhD, and then this is where I am at the moment. But yeah,
Fair.
so that's
So
kind of a background I have. Yeah.
fair. So tapping into your experience, I think the biggest help that I would want from you and I would want my listeners to learn from you is from the financial economist part, which is the area of your research. I do hear various things happening in the world. There are wars which are going on. The debt rate, the interest rates are close to a peak of probably the highest that we have seen them in the last decade or so. And so, can you tell us a little bit about what's going on in the world and what's the financial impact of what's happening in the world right now?
Yeah, sure. A very interesting question, because actually, I think we are sitting at a perhaps almost a century level transition in the financial economic status of the world. So it's pretty big transition, and the seeds of this were laid down in 2008 itself. So we are still living in the wake of 2008 itself. So it's not something that has changed dramatically, but it's post 2008 the things that were that started that are yielding the results kind of now. Essentially, it's the Japanization of the world that is happening right now. When I mean Japanization, we all know the condition of Japan for last couple of decades, right? It was kind of a dead economy, a zombie economy, somehow dragging along,
We
hardly any growth.
don't assume us to be as good as your students who would know what's happening in the Japan for the last decades. So you'll probably need to dive in a little bit more
Yeah,
detail
yeah,
on that.
yeah, yeah. So Japan went through a massive growth post World War II, despite all the nuclear bombs and the devastation that it faced. It went through a proper capitalistic cycle growing up. So we had big companies coming out of Japan in 1960s and 70s, Sony's and it all. So many of them. It was almost what the way we talk or used to talk about China till recently. That it's the manufacturing capital of the world. It's the this high-fire economy and this and that and everything. That was exactly the talks that used to happen about Japan in 1960s, 70s, and 80s, right? The growth was through the roof. The stock markets were through the double roof, almost to the heaven, and everything was like bright and shining and doing exceedingly well. And additionally, the military aspect of Japan was taken over by US post World War II, right? So all
Mhm.
their expenses were primarily in manufacturing and high tech, and the new things that were coming out, right? This continued till late 80s, early 90s, and then it just faltered as in it just completely stopped growing at all. It grew at a very, very low pace, 1 or 2%. So it basically what happened to US in 2008 is what happened to Japan in late 80s kind of a scenario, continuing on till 90s and subsequent. And it has been known as a mm, lost a decade. Now it's more than a decade, and lost couple of decades for Japan since then, right? And if you want to picturize it, you just picturize as a fast-running economy turning into a zombie, that घसीट के चल रहे हैं किसी तरीके से, right? And it's not that the government and the central bank didn't try to do anything. They tried every trick up their sleeve. So they went. So the first zero rate in the world, which is what US has done post 2008, but the first zero rates in the world happened in Japan in mid 90s, and the idea was to kick up the economy itself. Then it went on to do several monetary policy innovations, just to try somehow to get the energy back in the Japanese economy. All utterly failed, and devastatingly failed. Never came out of that loop, right? The reason this happened, this is a pretty important thing to understand about capitalistic economic in general. So capitalism, as the word says, is the rule of capital, right? And when we say capital, it's not just money that is capital. Real capital is debt. Uh, you look at any company, you will have 60-80% leverage minimum, debt equity ratio. Hardly any company which are debt free. And if you are debt free in a company, investors will come and tell you that you are not utilizing your capital structure properly. You should borrow and invest if you can do that, right?
Correct. Correct.
A lot of capital is actually debt, and that fuels a capitalistic economy. So whatever growth that we see in capitalistic economy, that comes from the increasing leverage of the economy, increasing debt of the economy. And when I say debt, generally people think about at a country level debt at a government level. No, it's not the government debt that is the most material part of it. The most material debt for any country is the leverage of households and firms, which is known as private debt. Households and firms, right? To what extent do firms are leveraging up so that they are better utilizing the capital? And to what extent are individuals like me and you leveraging up so that they are better able to consume on that? This fuels the economy, the consumption side, the individuals leveraging up, and on the production side, the companies leveraging up. They're doing the capex, putting up new production. We doing the leverage and we buying up, consuming and stuff like that. That fuels the economy. It goes up. This is a capitalistic cycle. This is exactly how it works. There is no skipping this, right? So there is no other way to grow in a capitalistic economy per se. And world is capitalistic. Even China is capitalistic. Whatever people say, China is also capitalistic in nature in that sense, right? So, but there is a limit at some point, especially if you grow the debt too fast compared to the production. At some point, the ability of individuals and the firms to borrow more crashes. We can't do any more of borrowing, right? And at that moment, something which is known as Minsky moment comes into play. So Minsky moment is go up, 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 leverage to the sky high, growth sky high, and then dumps down. So 2008 was a classic Minsky moment. 1929 Great Depression was another classic Minsky moment, right? The Japanese Minsky moment happened in mid 90s, late 80s, mid 90s kind of a duration.
I think late 80s में उनका वो real estate वाला पूरा crash हुआ था
Everything crashed.
टोक्यो
Absolutely. And you understand
80s.
why does this crash happens, Because to buy a home, you need to leverage, right? So if I buy a home today, if I bought a couple of homes today, I will be at a leverage of, 80% is the debt typically that people take home loans at, right? So if the economy is not able to generate new loan, or every individual is already leveraged, I have bought two houses. My 70% of my EMI is income is going into EMIs. I can't do one more leverage and buy something more, right? I can't do any more contribution to the demand, and the demand collapses. This is exactly what happened in 2008 with the US as well. You see, prior to US, we had real estate going through the roof, right? Which was why? Because everybody was borrowing, investing. Why borrowing, investing? Because everybody thought it's going to go up, up and up. Why it was going up? Because everybody was borrowing and investing, So it was a kind of a self-fulfilling prophecy. Till people believed it's going to go up, it kept on going up because people kept investing, borrowing through the nose and investing because अब तो ऊपर जाएगा फिर मैं flip कर दूंगा फिर मैं निकल जाऊंगा. which happened for some period of time. But 2008, it came crashing down because at some point this bubble is just pricked, right? And the leverage is so high, you can't leverage it anymore. You are paying 90% of your income in EMI, and nothing else can be done about it, right? So post that Minsky moment, what happens, right? So once the Minsky moment happens, which is the mass default or mass deleveraging at a societal level, everybody is
Hmm.
leveraged. Nobody has free money to either consume because everything is being paid to debt and EMIs or to invest new. So once that scenario happens, the collapse starts. After that, the growth is anemic, very, very anemic, because the real source of growth, which was debt, has been taken away. So assume that steroid has all gone from the system out, right? And now you are trying to exercise. पहले steroid लेके तो I used to do 100 kg. अब बिना steroid के hardly कुछ उठेगा छूटेगा. So marginal growths keep happening. धीरे धीरे, it's almost like a dead economy. It keeps perpetuating. So this happened to Japan in mid 90s. This happened to US in 2008. This happened to China somewhere in 2016 or 17.
Yeah, I did read about the debt crisis which is happening. वहाँ पे लोगों ने जो अपने घर वगैरह ले रखे हैं, उन्होंने लोन देना ही बंद कर दिया, नहीं दे रहे हैं. I think
Yes.
there was a massive strike which
Yeah.
happened because of that. I also remember reading about the debt that China has piled up, not only at the central level, they have a very provincial structure and state structure. And if you add up all of that state debt as well as the central debt, उनका debt to GDP ratio जो है वो काफी
Yeah. Out through the roof.
एक पोजीशन के अंदर आ गया है. So I did read about that, which brings me to my next question कि अगर मैं पिछले 20 साल की बात करता हूं तो worldwide and especially if I compare with India, clear China was the winner, China was the place to be, and that was demonstrated as well. I'm not saying that people who put in money in the Chinese stock market would have made a lot of money because that's a whole different story. But from an economy front, China has done really, really well over the last 20 years and has gone ahead of India by a huge, huge margin. On the other hand, especially अगर मैं पोस्ट कोविड कॉन्वर्सेशंस जितने भी मैं फाइनेंशियल इकोनॉमिस्ट और बाकी इकोनॉमिस्ट के सुनता हूं, they do seem to be making a very clear and a strong case कि वो 20 साल की बात जो थी वो थी, that is past, that is history, and for the next 10 years it is going to be India's story above China. And then, but then on the other hand, there are other arguments which are given that China is so far ahead of India in everything, in manufacturing and in a lot of other sectors, that even if that they're able to do very little marginal improvements, that would still mean that the global money will still move towards China and not towards India, because उनको तो पैसा कमाना है यार, वो वहां पे जाके कमाएंगे. That would be a better and a easier story for them. And so I have a bunch of conflicting views. एक व्यू के बारे में सब अग्री कर रहा है कि हाँ पिछले 20 years 2000 to 2020 was China's couple. So what do you think about the historical assumption of the last 20 years, and what do you see the next years panning out?
So the burning question, China, India, and all of the countries in that sense, right? So let's tackle it in two ways. Let's tackle the what happened in last 20 years or so, and then possibly current and future what we are looking out to in terms of China versus India or China versus globally in that sense, right? So last 20 years, China caught on to this capitalistic cycle. Prior to that, it was not fully into the capitalistic way of doing things. I think around 2000 only WTO integration of China happened, all those things happened. It was fairly well integrated with the world economy. And it's actually the point where China turned capitalistic. When I said capitalistic, China started borrowing and growing. Borrowing and growing in the sense internally. It has nothing to do with borrowing from some other country and growing, right? So all this large infrastructure improvement, you see China's photo 20 years ago, China's photo 10 years ago, such a stark difference, right? So 10 years, 15 years, the miracles that they did, they were able to do because they started borrowing, they got onto the capitalistic cycle, they started the companies, firms and individuals and state capitals and state municipalities started borrowing from banks, investing and doing things with it, right? What you do with the things that you do with it is very critical. So you can borrow and do corruption with it. No productive asset will come out. What will happen because of that? There's no productive asset happening, but borrowing is happening. Capital is going into the economy. Inflation will rise through the roof. So this is somewhat what happened in UPATU. There was a lot of borrowing, but no investing in productive assets. China, because of the nature of the economy, the nature of the country, the governance system of the country, they started borrowing and investing heavily in A, infrastructure. So you saw what you saw. B, in manufacturing, becoming the manufacturer, I would have said world, but in truth, it became the manufacturer for US, right? So it started taking dollar, manufacturing, and giving back to US. In the process, trying to upscale itself up out of the middle economy zone. So a good chunk of the capital that they had, internal capital that they had, which is the ability to borrow they deployed in these two segments only, right? Subsequently, infrastructure slash real estate, you can assume to be a similar sector, so to say, because I'm building cities, I'm of course building infrastructure, I'm of course building buildings as well, right? So they put in these two major parts where put in manufacturing for whom? For US. So, and in infrastructure. So infrastructure miracle, we saw what happened. What happened to what they did with US? So US got a lot of iPads free of cost or cheap cost, free of cost because they were taking dollars and giving them. So essentially, it's free of cost for US. They just print dollars and give it. A lot of iPads, a lot of things at very low cost from China. China got what? Some money from there. So they built up $3 trillion of US treasuries. Or we can assume $3 trillion reserves, so to say. They build up by giving US all the manufacturing things. And they build up a lot of real estate, a lot of infrastructure, a lot of transformation took place, right? But, and this is the problem with the China, the way China grew. They accumulated $3 trillion from US in 20 years of service since 2001 to 2020, you assume. And within a couple of years in the COVID time, US gave $11 trillion to its citizens. You see the difference. What China took to earn 20 years, 3x of that was given to its citizen in 2-3 years itself, right? So this is a problem of becoming the serviceman and the manufacturing man for others, right? So in the process, in this 20 years, China also exhausted all its capital. सारे capital, सारा leverage का exhaust हो गया. और उनको मिला क्या? बहुत अच्छा infra मिल गया. $3 trillion मिला जो यूएस को सर्विस किए. But real growth at a population level, yet not the level it should have been, right? So what essentially happened is China fell short of being a superpower because its money ran out in this process in this 20 years. It was deployed well, but it was not deployed very well.
अगर तुम ये सोचो कि वहां का एवरेज सिटीजन अमेरिका के एवरेज सिटीजन के बराबर हो जाएगा, दैट्स एक्सपेक्टिंग बिट टू मच.
No, you are correct. You are correct somewhat correct in that sense. So they did grew, as I said. अच्छी खासी cities बन गई है काफी. It's in the forefront of a lot of manufacturing. Cities are wonderful. The infrastructure is wonderful. There are also a lot of ghost towns, by the way, over there that have built up and all those sorts. So this is all signs of excess leverage and stuff like that. That is there. So I'm not even denying that it grew. I'm just saying the amount of capital it deployed compared to that, it didn't grow. It could have grown to, right? So you still have fairly okay GDP per capita. The overall population richness at the top is really rich, and no doubt about it, right? But the average richness of the citizens is not at the level it could have. So I'll tell you an example. China did in 10 years what US did in 30 years. So let's say US grew in, and I'm taking it from the point of view of the capital deployed, and the capital deployed is again private capital, private debt. So US went from around 50-60% household private debt to GDP to around 210% in 2008. So 30 years, 1970 to 2008. China went from the same level in 2000 to 2000. By 2015, it was at that level. So half the time. Same amount of capital deployed that US deployed, right? And the results are not as good as what US saw, right? It's not a superpower in terms of reaching the space in the same space. US went to space, did so new things. It's not a superpower in terms of, or a clear superpower in terms of military prowess. There are various. It's doing well. I'm not denying at all. It has reached a good stage. It's a power in itself. Decently superpower number 2 still, but it's not at the level it could have achieved with the kind of capital it deployed, right? Its plan was to become that only, right? But the capital ran out much prior to it. So India at the moment is exactly at the place where China was in 2002-3 kind of a scenario. Okay, so India is in terms of, so India is currently the only unleveraged society in the world today among the large economies. India's citizens' balance sheet, the firm's balance sheet of the India is the cleanest among all the countries, include US, China, Japan, everyone. It's the least levered out there. The scope of growth that we have, is the same scope, same growth that US saw from 1970s to 2010s, or what China saw from 2000 to 2010-15, right? And the way it is being deployed, if you saw China did in 15 years what US did in 30 years, most likely India will do in 10 years what China did in 15 years, right? Because that capitalistic final cycle where a proper deployment of capital happens, full resources are deployed, and it jumps up. And it's a cyclical thing. So direction is important, the governance is important, all those things are important. But it's as much important to note that it's a macroeconomic cycle position of India. So very few things can derail this from happening. The question remains that whether this capital will be deployed well or not well. You know, if you deploy it too badly, you might end up in a inflationary scenario with heavy inflation, nothing doing everything. If you deploy it about okay, you can do China. If you deploy even better, you can do significantly better than what China did. So the deployment remains the question of how well it is deployed. But otherwise, India is on that up cycle of capital that China was in 2002 and 3 in terms of immediate future, right? If I highlight a bit more of what is the condition of China today, so the condition of China today is almost exactly what 2008 condition of US was. The difference is the form of governance that is there. So US still had free markets, free capitals, all that news came out, all the management had to be done in public and it had to be done by the Fed. So we saw whatever we saw post 2008. China is a very controlled unit, right? So its ability to manage the fallout is also higher. And it is trying everything it can to do that only, right? It is able to somehow scrape through better than what US was able to 2008. But the fall is inevitable because once you reach a societal leverage which is so high that the most of the income has to go in debt service, either by the firms or the municipalities, or you just can't grow. जब तक वो डेट नीचे नहीं आएगा तो just can't grow. There is no scope only. Income ही खत्म हो गया सब EMI payments में it's going to go.
China didn't deploy, let's say, very, very well. Are there any other economies that you can indicate कि नहीं इन लोगों ने फिर भी better किया in comparison? Say, for example, I don't know, would South Korea be a legit example for this, for moving from middle income to a high income economy, or there are other ones that you can think of?
Having said whatever we talked about China, Japan and others, Japan actually deployed decently well. So you see, it grew rich before it faltered, right? China hasn't grown that rich before it has faltered. US also deployed actually fairly well. By the time 2008, when the real crisis came, it has grown really rich and really ahead in most of the things in that sense, right? So it's not that bad that in fact, China has deployed it among the bad ones, right? I must though say one thing when you said that, let's say, debt of Pakistan, Sri Lanka, or South Africa, these are government debts. The governments are taking and stuff like that, right? And that lands up in geopolitical troubles that we are seeing that they are seeing. So that's a different ballgame. The debt that we are talking about is the private debt, the debt of the household and the firm. So debt like me and you being leveraged, you know. So currently in US, people are running EMIs of 80% of their income, right? Similarly in China. And you would hardly find people in India who are that heavily leveraged, you know. Their income is significantly free to today take loan and bet on real estate, right? Or take loan and bet on stock markets, you know. So that balance sheet is really clean. So our ability to the extent that we can grow because our balance sheet is clean at the moment is very high, right? In terms of your deployment question, yes. So US is a good example of how well to deploy it. Japan also did it wonderfully. China didn't do it that well, actually. It could have done significantly better. If it did the way US did it, it actually would have been a superpower. Well, US को surpass कर गया होता. It would have done really well. That's it.
Probably India would be in a much better position than China would be over the next decade or so. Obviously, India that's a different story altogether. But to bet India is a much better bet than China for the next decade.
Yeah, for sure. But there is going to be an interesting development that is now happening world over. Japan, it faltered in the 90s. It tried all the capitalistic tricks that was there in books to do whatever it could, but it was not entirely having all the arsenals of the tricks that it had. What kind of tricks it didn't have that US has or China has? So one of the tricks of and such a scenario when all the sectors are over leveraged, there is no scope of growth. Wherever you pump in money, it just can't grow. Stock market भी, it has grown whatever it could grow. Real estate भी जितना बना सकते थे सब बना दिया है. Military remains one of the ways in which to pump. That's the last thing to pump the economy. Japan didn't have that, by the way. So it couldn't do it. US has it. China has it. And they have reached a stage where all the tricks to pump up the economy has almost gone busted. China is in the last leg. I think it got somewhat better number this quarter. because they are putting in all stops, every kind of things that they could do. Debt को छिपा दो, debt को बताओ मत, report मत करो, free का money ले लो, इधर से borrow करके उधर भर दो, whatever trick you can think of, they have deployed all of it and somehow gained some bit of it, but that can't sustain at all. The last thing to sustain remains war economy. War economy in the sense not necessarily doing proper wars, which are happening by the way, but also doing Cold War kind of a scenario, right? Or military races, right? So the military races is going to happen in the world, and I think it's a direct fallout of the financial condition of the world. Because that remains the last resort of pumping up the economy, the places where US and China has landed up. By the way, do you know when the world got out of Great, or US got out of Great Depression? It started in
That was
1929. Huh?
so when they started participating in making stuff for the war
Absolutely.
was great for the economy. That has
Absolutely.
often been said.
Right. So I'll give you another example. At 1921, 9 was the another Minsky moment kind of a scenario, right? Where the leverage has reached sky high. It was 150, 160% private leverage. Huh? People have took up loan and bet in the stock market. Stock market was through the roof. All those things has happened. And then the inevitable fall came, 29. All tricks tried, nothing worked. The leverage was, I think, 160, 170% level. And then the war came. Post-war, the leverage of US was back to internal leverage, of private leverage, 50%. And the growth started restarted again, right? So whatever be the overall geopolitics that leads to such kind of wars, financial condition is actually one of the central things that pushes a lot of levers for people, you know. So I suspect that military race, military wars, military race, another possible avenue is space race. So these two things are going to blossom like anything in next half a decade or a decade kind of a scenario. Globally, as I said, I think the only couple of countries who are free of any major crises and in near future are going to be free of any major crisis are India and Russia. Russia is also very well put in terms of its production capabilities, its very low leverage as well. There are very few people for a lot of natural resources that they have. India is structurally extremely well placed, right? So we will see a lot of foreign investors also coming in. Indian debt is going to be included in the global debt index. JP Morgan is going to do that in some time in next quarter or so. So a lot of capital will flow in from there as well. And if you will see another thing, if you will see the yield difference, this is a new thing, and I'm probably thinking of writing something on this. The yield difference between India and US, which is the amount of interest rate that investors want from India to take the Indian treasuries versus what they want from the US treasury. It's at the narrowest point in its history, right? Definitely for last 10, 15 years.
Do you think this is going to have an impact on not just with respect to India, but now I'm talking about the US because of the interest rates that those guys have, the lot of dollars that they have printed. We do keep hearing about that the power of the dollar is going down globally. Yes, so we can understand that from a 50-year perspective, the US economy is not what it used to be 50 years ago, and the number one superpower and all that. But do you also see the value of the dollar falling? And by falling, I mean a sort of de-dollarization happening. I'm not talking about the value of the dollar falling from 83 rupees to 73 rupees, but the power of the dollar reducing a little bit, countries interacting with each other, doing trade with each other in non-dollar formats, and the world going through maybe, if not a replacement currency, but at least a de-dollarization of the economy, so to say, the global trade economy becoming de-dollarized.
Yeah. So, I mean, reserve currency of the world is direct function of not the economic power, or it falls off from the economic power. It's a primary function of the military power, right? Because somebody says no to dollar, they will send their F-16s to bomb you only. Yeah? Mera dollar nahi lega, mera goli kha le. You know that kind of a scenario. And US is still the foremost power in the world. We have no doubt about it. And that's why there is no big war happening today. Any big war which is direct US involvement will see US win. There is no doubt. As of today, a decade down the line, whatever happens, it might be a different scenario. But as of today, US remains the foremost power in the world. That's the truth, right? But the dollar has now started creating a lot of problem for a lot of countries in the world, right? What kind of problem? It's not just because of fall of price of dollar. Actually, any volatility in dollar is a problematic scenario, right? If the dollar goes up, that's a bigger problem than dollar coming down. Why? All the import dependent countries would see the price of their import rising for none of their fault. As an example, if I want to import oil from Russia, US has got nothing to do with this. I and Russia deal with it. We fix a price and we want to import. If we fix a price in, let's say dollars, right? अब दिक्कत ये है कि dollar has started rising and goes up 20% in, let's say, next 6 months, 15%. My import bill, for no fault of mine and not even being desired by Russia, goes up unnecessary. Why did dollar went up? वो उधर फेड ने कुछ कर दिया, ऊपर कर दिया, नीचे कर दिया, समथिंग कर दिया. अरे फेड ने किया, मेरा ऑयल बिल बढ़ गया, फ्री फंड का ऑयल तो हम यूएस से खरीदते भी नहीं है, इधर बढ़ गया. So the currencies on which the pricing, we call it menu prices, the currency in which the menu prices, menu prices, the currency on which the menu prices of the world is written, that needs to be utterly stable, right? Or well stable. It should not go up too much, it should not fall down too much, both. Either of the things that happens, it creates a lot of problem for trade and settlement of the world. And that's where the problem has started in US, right? With the Fed actions and the 2020 onward, the inflation issues and all that things, the prices of dollar has been climbing significantly now. And this is the US dollar climb is one of the primary reasons why we saw economies like Pakistan, Sri Lanka faltering the way they faltered, because they were heavily import dependent, and import bill just shot up 20% one day. All right, out of the business only, yeah, crashed. Right. See the impact of this, how our independence of monetary policy is lost because of the Fed actions. That you remember there was a time in COVID we had 100 unicorns. 1 year 100 unicorns. Why did there were 100 unicorns? Because for a first time in a long period of time, Indian interest rate was decently low at 4%. The moment interest rate, we had 100 unicorns. So today, if you want to match up in industrialization size to China, all we need is 2, 3, 4 years of low rates. And you see the kind of climb and jump it will happen. But we just can't do it. Why? Our import is dollar dependent oil we import, and that oil is priced in dollars. Big problem. And this is not just a problem of Pakistan and Sri Lanka to carry belly up only. India, it's a problem globally. Because globally, agar purchase price, so why is Bitcoin not used as a material to price things? Why it's not a currency today, right? Even though Tesla says that I would give you Tesla for Bitcoin, it can give Tesla for Bitcoin, or his favorite meme coin concept, Dogecoin. It can give in Dogecoin, which would be exchanging Dogecoin for Tesla, but it can't price in Dogecoin or a Bitcoin. It can't say my Tesla is 100,000 Bitcoins. It can't say that. Why? Because the Bitcoin pricing today is X, tomorrow would be 1.2x, day after tomorrow would be 0.95x. So menu prices like this. You can't, jaws can't work, right? So the volatility of US dollar, whether climb up, which is now happening because yields are going up, and the moment Fed starts cutting, you will see US dollar going down as well, right? It's not palatable at all for world economy, right? It's a macroeconomic problem. It's no more a geopolitical problem. It's become a macroeconomic problem, right? So what is the solution to that? The solution is not very different from what is being attempted in terms of operations and supply chain with respect to China, which is that world was too dependent on one particular country for all the supply chain works and all the operations that manufacturing coming out of it. And there's a supply chain risk of concentration out there. Huh? For some reason, if supply chain disrupts or the country disrupts, your inflation, goods will not be available in your market. Huh? For in India, there were 10 months, 12 months of line for buying a car because supply chain was disrupted world over, right? Goods se price chodo, goods rahega hi nahi market, right? So then what do? You do China plus X, right? You diversify away from China, right? You start using other locations where you can manufacture. Do not shut off China at all. You can't do that. It is such a big supply chain source. You just can't do it. But you can start diversifying away, right? That's exactly what has been happening to dollar. That's the other part of it, counterpart of dollar as well. So people say de-dollarization. I say it's not de-dollarization. It's dollar plus X, right? Where people will start diversifying away from dollar, and if the diversification is high enough diversification happen, then automatically world reserve currency status would change, right? Or new currency status would come in, or new global currency can be floated and stuff. But the first step is diversifying away. People are currently diversifying away using bilateral trades, right? Because the global trade system is still one, which is SWIFT, which is largely still dollar dominated system, right? And if you want to diversify away from dollar, you want to use other currencies predominantly, you either enter into bilateral trades with them, bilateral contracts with them, and do a bilateral trade. So India, people say India got oil cheaper 20% at discount from Russia. It was not 20% discount from Russia. It was a price negotiated in rubles and rupees. So dollar 20% up climb करके इस कारण से oil price only 20% ऊपर. You don't take 20% discount. तो dollar का problem dollar ऊपर गया. I negotiated with Russia that I want to have oil in your currency. Let's fix the price in your currency. Dollar को जाने दो जिधर जाने का. And we might see in this year BRICS Pay, which would be a global trade and settlement system, not a new BRICS coin or so to start with. At least that's what I think. They can do both if they want, but I think getting a new reserve currency would actually mean US coming in with its FX and saying कि अब तो war ही होगा, you know. तो उससे पहले स्टेप वाइज करने का पहले एक ऑल्टरनेट सिस्टम लाओ, उसमें ट्रेड स्टार्ट करो, फिर ओवर अ पीरियड ऑफ टाइम व्हिचएवर वे इट गोज right. So yeah, it's dollar plus X rather than de-dollarization. It may result in de-dollarization in half a decade kind of a scenario. Dollar importance is definitely going to come down, and it's not just geopolitical reason, it's macroeconomic reason. Dollar is rapidly becoming defunct to serve as a reserve currency of the world. So there is no doubt about it. That's
fair. So see, our conversation has been about the macroeconomics, what India is supposed to do. So if I can just summarize, the importance of the dollar is going to go down. India seems like the place to be, and more important than that, all other places are in a very precarious position. Keeping all of that in mind, what are some actionable insights that you can tell me कि हाँ ये सब अच्छी बात है, बात करने के लिए, ज्ञान के लिए ठीक है, but अगर तुमको कुछ करना है, so these are the steps that I can take or our viewers can take, in your opinion, which will help them over the next decade with their investments, with their money, etc.
Yeah, definitely. That's the most bottom line, right? अब दुनिया में कुछ भी हो रहा है, पर इधर कैसे करने का?
हम क्या करूँ?
राकेश झुनझुनवाला से किसी ने बोला था कि मेरे को ये न्यूज मालूम था, ये होने वाला है, तो मालूम था, किया क्या तुमने? हाँ, that's the central question. So किया क्या करना चाहिए? That's a key question. So couple of things. So I must add, India is going to outperform like anything. So that should be very, very, very clear. India is not just going to outperform; it's going to outperform the way China was outperforming in 2000, 2010 kind of a scenario. It's by far outperformance, especially when everything else is falling, right? So India is a good bet to have. Now, extra alpha generation on that. So in terms of investment, if I go sector-wise, banking is always a good sector to invest in, because just talking about it, capitalistic economy don't grow without debt. So वो debt होगा ही तो performance अच्छा होगा ही. So banking is a very, very good proxy for generating some alpha over and above the economy. So if you feel India is going to go really great, banking is the first sector you should think about. So banking, very good. Choose good banks onto that. In banks, the simple rule is bigger the better. Okay, जितना बड़ा बैंक उतनी अच्छी बात है. And there are other performance criteria as well. I'm not denying on that, but the rule of thumb is definitely before taking bet on lower banks, try the bigger banks first. Okay, so banking sector, very good proxy. We just talked about military, so any military sector or any proxy play on military, very good thing. I think in some sense L&T is there, but a lot of new companies are coming up on military side, or which are going to development on the military side, drone related companies, and so on and so forth. Very, very good bet. In fact, they would give very good outperformance compared to the overall economy index itself. So military is one good place to be in. Real estate is also going to do well in India, decently well in India. I wouldn't say really outperform, but decently well in India, because any growth, again, real estate companies, any leverage growth, any growth comes from debt and stuff like that. Real estate definitely takes up the play onto it, right? So that's there. One sector which is not going to do good at all is IT. Huh? So IT, because दुनिया की वाट लग रही है, तो IT का तो export oriented है, उधर से लगेगा ही. Second sector reason is Gen AI revolution is going to do a lot of disruption in the sector, a lot of disruption. So Gen AI is now reaching a level where it can act as a junior coder on its own, right? So people cut off, expenses cut off. So IT sector is one sector which is going to see a underperformance overall in the medium term, at least, if not long term. Infrastructure sector really good. So we saw what happened in China related to infrastructure, right? Imagine the same happening to India. There is no doubt. And infra is again another sector which is fully leveraged. Huh? So most of the infrastructure that you see, airports that you see coming up, or roads that you see, they are 80-90% leveraged. Huh? They are like real estate in that sense. Huh? So as companies are able to leverage and the government focuses on infrastructure, it's going to outperform as well. In the infrastructure, typically it is said that direct asset owning companies are a better play than EPC in terms of outperformance. But I think even EPCs are going to do really well. So EPC is engineering, procurement, construction. So EPC is construction companies. Asset-based infra would be something like like the roads, IRBs of the world and stuff like that, which have assets from which BOTs they take and they own the assets itself. Or Mundra is, for example, asset-based infrastructure company. So
Fair.
even EPCs, because the pressure of construction is going to be so huge that even EPC companies are going to do really well on that side. So infrastructure is another good sector. Pharma about I don't know. Pharma, I think the time to invest in pharma might have been in the past. So pharma is not something that great that it might do. Uh, among the sectors, what other sectors can do well? I think this is what I would talk about in terms of the mid cap, large cap, and small cap, right? So a lot of
Hmm.
money is waiting on the FII's money. If you look at the yield parameter, which is a narrowing of the yield between India and US, which you just talked about, and the FII flows in general that has been. So the current performance of Indian market has been entirely due to domestic funds. By the way. Huh? So Indian stock market has increasingly become Atmanirbhar, so to say, domestic capital after a long period of time. And this is also to do with the cycle of the capitalistic cycle at which place the India is in. This is a stage where domestic money starts coming in a lot. So again, revert back to 2000, early 2000s of China. Similar thing happened over there as well. Prior to that, FI, bahar ka money chahiye, uska apna hi money काफी था. But a lot of FPI is waiting to invest in India. They are well aware about the India stories. They are not investing because of, I say diplomatically, because of election uncertainties, right? But the moment half of the elections are over, or maybe the election results are announced, you would see FIIs would come in large growth to India. That's money waiting on the corners to just come in, right? And typically, when there is a large outflow of such FIIs to India, one of the large cap tend to outperform. Every sector does well, but large cap tends to outperform. So in terms of short term, I would say large caps are a good bet short term. But given the kind of financialization of Indian economy, which is domestic also coming up, and post-election you will see foreigners also coming up. So everybody will be in India only in that sense. The breadth of Indian capital market is going to increase a lot. Right? The moment the breadth increases, there is a climb up of the capitalization of all the companies, right? So mid cap will start becoming large caps, small cap will start becoming mid caps, so on and so forth, right? And in these kind of scenarios, it's the mid cap which benefits the most, right? So because large cap exhausted है already overvalued होता है, people start looking for values, and they also don't want to be stuck in liquidity, right? So mid cap is right in the space where it has got some liquidity and as well as enough growth scope for there to outperform as well, right? So from a medium term perspective, I would say mid cap is a very good bet across sectors. Large cap from a short term, I would definitely recommend on that. That's based on the size part. So yes, one thing that I actually missed, which you just mentioned, is gold, right? So gold
Hmm.
is good. By the way, all central banks world over are buying gold these days.
Hmm.
For a long period of time, 3-4 years, the gold purchase has gone through the roof. The reason for that is again this bilateral trades. Once you have to settle the bilateral trade, start doing it in gold, right? So gold is
Hmm.
going to really see a climb up. Gold, it might be slow sometime, but just spike up in between, then slow for some time and spike up in between. But gold is definitely a good investment to keep, right? So, in terms of, and I'll probably revisit this when I explain my portfolio. So, one thing that I always keep in mind, and is not today's, I think this, I've been doing it since 2005-6 when I actually entered the stock market and stuff like that. I keep 5 to 10% of my portfolio in physical gold always. Physical gold as in not jewelry खरीद के कुछ रखा है आप
Hmm.
buy the coins or buy the bricks or whatever because when everything fails, and these days the way the world is going, there is some non-zero risk of everything failing. When everything fails, this is what is going to rescue you from everything, right? This is the most liquid thing to have. ये भी गोल्ड नहीं चला तो आपको बस जमीन खुद के अपना खाना उगाना पड़ेगा और कुछ नहीं बचेगा बट उससे पहले तक गोल्ड ही चलेगा और कुछ नहीं चलेगा राइट so not just ETF also, because when financial systems fail, ETFs also fail. When financial system fails, the sovereign bonds, वगैरह, everything fails, right? So 5 to 10% in physical gold is always something I recommend. In today's world, I think this recommendation is actually even more important, right? There is a non-zero risk of everything failing someday because किसी को कहीं गुस्सा आ गया यूएस में या किसी को कहीं गुस्सा आ गया चाइना में तो बोला कि अब तो यार हो गया बस so that is a non-zero risk. So in terms of that, 5 to 10% physical gold. But overall, I am more than that. I've also got sovereign bonds and ETFs in gold as well. So I am currently sitting at around 20% in the gold. Uh,
Hmm.
I have currently having some amount of 10% of cash also liquid because I think prior to election, we might get a good time to pick up a few things. So some liquidity I have kept aside. Rest among that, I actually keep most of my funds in mutual funds. So I take sectoral call on mutual funds. The primary reason why I do this is because stock market picking and stock investing, good idea and stuff like that. And for COVID, for a couple of months, I went back into it, and I was actually working in that prior to my PhD. And the one thing I realized is that if you do that, that's a whole day business. Huh? वो 5 रुपए ऊपर गया 5 टका नीचे गया वो क्यों गया कैसे गया वो डेली का
Obviously, मेहनत करोगे तभी पैसा मिलेगा बैठे बैठे तो मिलने वाला है नहीं
करेक्ट
तो मतलब
करेक्ट
कॉलेज में जाके तुमको क्लास तो लेनी पड़ेगी ना यार पढ़ाना पड़ेगा तभी तो
Absolutely.
सीखेगा
So I don't do that, but because I have people to teach, and if I don't teach, तो institute बोलेगा या तुम stock marketing में कमाओ इधर क्या कर रहे हो right? But I do take sectoral calls and size calls on my fund. So I am I am currently over invested or over allocated to infrastructure. I'm currently I got higher allocation to banks. I've currently got very low allocation to IT. The sectoral funds is what I choose. I am currently overweight on mid caps and long caps. I was overweight on small caps for a long period of time, but now I have been trimming it a bit. So for a long period of time, it was more mid cap and small cap heavy. Lately, I've been portfolio. Lately, I've been switching more to large caps compared to small caps. Mid cap, I've left it where it is at the moment. So yeah, broadly, that would be around 50% of my. So 20% on gold and related, 10% on this, and 50 to 70% depending on the cash liquidity system I want to keep is in mutual funds. So that's my overall.
fair so 20 gold 10 cash in case an opportunity comes up and the rest of it is broadly invested in mutual funds and sectoral mutual funds and depending upon your calls at various points of time. Fair, man, fair. So I think that gives us. Oh, but okay, so one more question: in any of these mutual funds and any of these equity investments, they are all Indian mutual funds and Indian equity. कि इसके अंदर अच्छा हाँ US का S&P 500 भी है या Nasdaq भी है or maybe some individual stocks.
No, I've been. My brokers have been, or whatever, my financial advisors have been behind my back to do some outside because the opportunity is available now. So to say, they say now you can do it. Earlier you couldn't do it. It's so easy to do it. But no, I am actually firmly, or all my analysis says that the world is going to be in deep trouble in mid to long term, even possibly in short term. India is the only place to be. Currently, there is absolutely no doubt about it. There are not just known risks that are there in the world. There are many unknown risks also that are there in the world today, which can come back like anything. So no good performance I see outside India currently at anywhere in the place. I mean, you can take option calls on things like Africa and those guys. Some dal dete hain, maybe it go through the roof. But no, I don't really feel like taking option calls on lower economies, and the big economies are no, they are not a, they are a place to get out of at the moment. So it's India, India, and India for me at the moment.
Couple of books which are not for your student level, but let's say for a layman, you would recommend कि अगर तेरे को चालू करना है इकोनॉमिक्स के बारे में पढ़ना तो ये आसान किताब है यहाँ से चालू कर.
So common books we all know, Intelligent Investor, Warren Buffett, Charlie Munger, and those guys that are there for investing per se, right? But my recommendation on it is a bit different. I think with the kind of the speed of development that we are seeing these days, I think Finance Twitter is the best bet actually. So most of the knowledge, because value investing, these all, I don't think so they will work the way they were working in today's scenario, right? Today, it's very heavily news dominated. It's very heavily fast development dominated. So Bank of Japan is doing something. It will have an immediate effect on things. What is the impact of Bank of Japan going to be? Nobody is going to tell you in any of the books. The churn is so high. The activity is so high that I feel Fin Twitter, and lately LinkedIn is also coming up a bit, but I still think that in terms of finance news and finance analysis, Fin Twitter is the best bet. Maybe YouTube channels of a few guys I can probably think of. There's this guy who does a lot of on Bank of Japan. I'm forgetting his name. But maybe some podcasts and YouTube is another source. But I would recommend Fin Twitter very strongly on that side. Right. One good books on economics, which will tell you about structural economics and why economics actually get things wrong more often than not, is this book Debunking Economics by Steve King. It's a very good book. But it's a structural book. It will not tell you about investing per se, but will give you a very better understanding of what is happening in the world today, given the economic turmoil that the world is seeing per se. Right. So that's one book, but otherwise I would say, well, standard books we all know about, so that people can go about anyway. Fin Twitter is the right thing to go at the moment.
Fin Twitter is the place to be.
Yeah.
नहीं, इकोनॉमिक्स के लिए मेरे को आई डोंट नो तुमने देखा है या नहीं देखा है, एक चैनल है इकोनॉमिक्स एक्सप्लेन्ड करके on YouTube. I think probably an Australian guy runs it. Does a fairly good job in explaining economic concepts and how they impact the world. So any of the users, you want to check that out, please do. That's a pretty good channel. और जब आप वो चैनल देखने जाएंगे उसके पहले मेरे चैनल को भी लाइक और सब्सक्राइब वगैरह प्लीज कर लीजिएगा. And on that note, I think we can wrap up today's session. So thank you, Vidhu. Thanks a lot for coming. Any parting message for our followers?
Thanks, Ravi. It was a very interesting chat. Good fun to be here. Parting message, I think India is the way to go. No doubt about it. I also think that there should be a good rally post-election. So near to middle of the election is a good time to invest in. So yeah, those two parting notes. And remember that gold thing, 5-10% gold का physical asset रखने का. I am telling you, किस दिन आग लग जाएगी दुनिया में पता नहीं है. That is another important advice that I would say that people should keep.
Done. चाहता हूँ मैं तनिष्क पे अभी ये कॉल खत्म होने के बाद. Thank you, Vidhu. Thanks a lot for coming.
Bye bye.
Thank you guys for watching. Bye.